Hi, welcome to Real Turkey channel. You are with Atilla Yesilada. I know you are surprised because after a long absence, I am back to doing weekly videos and I hope to sustain this pace as long as my health permits or the government doesn't arrest me. Turkey is undergoing the mother of all crackdowns or witch hunts where almost everyone is getting arrested for even the slightest offense to the government. But don't worry about it. Today I'm not going to talk about Turkish politics or even the economy. Your comments, which are brilliant, even if you are trolling me, inspires me to do this. And today I'm going to answer three frequently asked questions. First, when is Turkish lira going to strengthen? B, Turkish real estate market. Three, that's not asked, but I think it's important because there is value in there. Turkish stocks, they are underappreciated. Let's start with the Turkish lira. Actually, the way economists view currencies suggests that Turkish lira is overvalued simply because when we look at the value of a currency, we adjust it for inflation. Last year, Turkish lira lost roughly 15% against the dollar, which is bad for the expats or for those who earn Turkish liras. But Turkish inflation was roughly 45%, so actually it appreciated quite a bit. If you are asking whether the dollar TL will ever decline, no, not for the next 10 years, simply because currencies usually move in response to interest rate or inflation differentials. For Turkey, Turkish lira, to gain against dollar or euro, A, Turkish inflation must drop to 2%, which is not going to happen in your lifetime, or Turkish interest rates must be increased substantially to attract a lot of dollars into Turkey, which would obviously, because of supply and demand conditions, elevate the value of Turkish lira. But that is also not in the works, even though this summer, for a brief period of 3 months, we could see dollar TL drop, simply because at that time, I expect Turkey's central bank, which currently manages the exchange rate, it's called a managed crowd, though over the summer months we may witness the dollar dropping 1 to 2% against Turkish lira simply because tourism season. A. B. The central bank will probably abandon the current exchange rate policy of managing the daily depreciation of the Turkish lira to exit from the strong TL policy. But that would be temporary. I think in the winter the dollar will continue to appreciate against Turkish lira. Real estate market. Very briefly, real estate is not a good investment proposal. If you wish to live in Turkey and buy a house, don't. Simply because Turks invested into foreign residences to the tune of $2.2 billion last year. Now, try to understand this. If the people of a country are not buying real estate in their own country and going abroad where prices are very elevated. So, they're buying houses in London, Paris, New York, etc., or in the United States, in all the states, as far as I can find information. Then you have to wonder whether you should buy into the real estate sector of that country. But let's be more specific. First of all, today, the Turkstat, Turkey Statistics Agency, announced January house sales. 112,000 units are sold. That's a massive decline from December number of 220,000 units and a 6-month low. Why? Simply because as the volume of sales picked up over fall and winter months, home builders increased their prices and suddenly demand died. In a country like Turkey, with a young population, still a fairly considerable family formation rate, and according to official statistics, rising dollar GDP per capita, you would expect home sales to increase continuously and home prices to appreciate. In other words, home prices to rise faster than the price of other goods and services. Why is that not happening in Turkey? Why don't I expect this to happen in Turkey? For a simple reason. A, all of our youth are unemployed. The youth unemployment rate is roughly 20%. Turkey's broad-based unemployment rate is 25%. In essence, potential for home buyers are not as high as population dynamics suggest. Two, yes, per capita GDP in dollar terms is increasing, but unfortunately, income inequality is increasing even faster, which means the primary buyers of homes, the middle class, young families, either they have children or they just got married or they have chosen a life partner. I'm, gender unbiased here, don't have enough income to buy houses anymore. I live in one of the richer suburbs of Istanbul because I migrated here 30 years ago when prices was very low. But before doing this video, I checked the prices. A 3-bedroom, 100 square yard unit, flat apartment, goes for $300,000. The average middle class family would make something like $45,000 a year. You see how impossible it is to buy a house. Furthermore, interest rates are still high. I mean, Turkey has only 10-year mortgages compared to the United States and developed countries which offer 20, 30 years, which means that your annual payment, interest payment on a mortgage is 2 to 3 times higher than the average American home buyer, which makes affordability a serious issue. Another problem is great uncertainty about supply. We know demand. I think over the last 2 years we have seen a pattern. If real estate prices drop in real terms, in dollar-adjusted terms, or if interest rates drop, then demand for houses increase rapidly. What about the supply? The major uncertainty is Erdogan's ambitious urban renewal project. This doesn't exactly describe what the concern here is. It is essentially an attempt to earthquake-proof Turkey's residences and buildings. Turkey is an active earthquake zone. According to a World Bank study, at least half the buildings in Turkey will not stand to a Richter scale 7 earthquake, and the cost of renewing these would cost $500 billion. Of course, it's not going to be done overnight or over a year, but Erdogan's goal is to facilitate the renewal of at least 100,000 apartments a year. Okay? Now, the way this works is every time an apartment building is torn down, the new building has more flats and more space. So this increases the supply. But in the short run, when houses are torn down, supply goes down and prices goes up or rents go up. But in the long run, which in Turkey has become 15 months, that's the average duration of a typical flats construction time. In 15 months, if Erdogan finances this plan, you will start getting new supply into the market. And to sell the new supply, home builders will have to reduce their prices, or talking about Turkey, where inflation inflates everything, they will have to increase their prices slower than the inflation. Honestly, very simple proposal. Look, let's say Turkey's inflation this year will decline to 30%. And let's say the average house would appreciate by 30% too. Dollar TL will appreciate by 20%. So if you invest your dollars into a Turkish real estate, you will earn 10% on average. That is not a good return, simply because it is very messy to buy and sell houses and there's a liquidity issue. Whereas if you invest into a Turkish FX government bond, you would get 7.5% without really getting your hands dirty. So it doesn't make sense as an investment proposal. Let's move on to Borsa Istanbul. Last year was awful for emerging markets. Yes, the MSCI Emerging Markets Equities Index gained about 8% in dollar terms, but guys, come on. S&P gained what, 25%? So emerging markets really just followed the coattails of S&P and generated miserable returns for a multi-country investor. Borsa Istanbul did fairly well in those terms, but still lagged the S&P 500. This year, the story is not going to be very different. We are dealing with massive uncertainties, such as Fed not being willing to cut rates, which raises the dollar index, Trump's tariff wars, creating great uncertainty about which countries will benefit, which stand to lose. And finally, the expectation that Trump's tax reforms or tax reductions would increase American budget deficits, which would decrease the value of bonds and increase bond yields. Traditionally, you don't need to know much about emerging markets to make money. If you believe that the dollar index is going to decline and American interest rates, both short-term and long-term, are going to decline, then you buy into emerging markets. It's an automatic money maker. Given these, Turkey is a completely different story. And this is why foreign investors have not bought Turkish stocks. Turkey is not on their radar. Why? A, Turkey has no part in the upcoming trade wars. We would neither gain nor lose from Trump's tariffs. Turkey's trade volume with the United States is maybe 5% of its total. We run a trade deficit with the United States, and Trump has already imposed 25% tariffs on Turkish steel. So no matter how you look at it, we're not a part of this story. But investors are looking for winners and losers. They're not looking at Turkey. So there is this benign neglect which causes underinvestment by foreigners. Two, Turkey doesn't have a sexy story. Look at where people are investing. India, could it become the second China? China, DeepSeek, wow. There is going to be much more artificial intelligence products from China, so buy Chinese stocks. Oil prices will go up. Buy Gulf stocks or Brazilian stocks. Turkey doesn't have a story like that. In fact, the story for the Turkish Stock Exchange is that it doesn't have a story. It's a value play. How is it a value play? You know, earnings expectations are pronounced by major investment banks every year, and more often than not, they, and humble people like myself, are wrong. But they give you an indication of where the market might go, okay? This year, the index target for Turkish stocks is 14,000 points. How do I find this? I read reports by major Turkish investment banks, and the consensus is that at the end of the year, the main index will rise to 14,000 points. Currently, it's at 10,000 points. So there is a TL upside of 40%. Turkish lira, controlled by the central bank, will at most depreciate 20% against the dollar. So, on average, assuming no black swans or major risks, Turkish equities for the long-term investor will yield 20%. That's much better than the EM averages. Put differently, Turkish equities are currently trading at a 45% discount to MSCI average. Turkish stocks always trade at a discount to MSCI. But this time the discount is much bigger than the historical average, to the tune of 10 to 15%. So no matter how you look at Turkish stocks, there is value. But God forbid, there's an earthquake. Erdogan decides to arrest everyone. Trump and Erdogan fight. These are the things we can't control, and you don't base your investment decisions on these unless you have a very strong belief that what we call fat tail risks are going to materialize. So again, look guys, gals, whoever is watching this, I'm not in the investment advice business, not even in my professional life. I write reports on Turkish politics, on the economy. So this is not an investment advice. But if I had money, rather than buying Turkish real estate, I would buy into Turkish stocks. This has been another video of Real Turkey channel presented by Atilla Yesilada. I want to thank all of you for watching this and for your incredibly fascinatingly funny commentaries. Please keep them coming. Have a good day now.